We're talking about India's leading commodity exchanges, MCX, that has launched the exchange of futures for physicals transaction facility for the first time in India. That's the news coming in today. We have Lamin Rattan, MD and CEO of MCX, joining us on a phone line. Mr. Rattan, first off, how does the futures for physicals transaction facility really work, and what's the advantage there?
To simplify somewhat, an EFP, an exchange of futures for physicals, allows a physical market participant to separate his logistical needs and the pricing of the commodities that he buys or sells. For example, let's say that you are a producer of copper, and you will be selling copper from time to time. Now, right now, if you want to improve your logistics, you would be selling copper to forward contracts, delivery in 1 month time, 2 month time, and you would have to negotiate the price now. That gives you two problems. One, you have to agree with your buyer on the price of copper for delivery in 1 or 2 months time. Very difficult, because you may disagree about where prices will move. And second, even if you agree on a price and prices then move in a certain direction, your buyer may default on his obligation. He may walk away from the deal. Now, with an EFP, you eliminate both problems at the same time, because basically in the contract you write an MCX price. And both of you independently, the moment you announce this to the exchange, you get a long position, your buyer gets a short position, and you can individually close out that position when you want. You eliminate counterparty risk, at least most counterparty risk, and you make it much easier to optimize your logistics.
So, Mr. Rattan, what you're really telling us is that MCX has found a way to increase business confidence and trust in these turbulent and rather risky and volatile markets. But moving away a bit, in the last few months you've seen that your volume of bullion trading has dipped a bit. Why has that been?
Well, we believe that there are a number of reasons. One is volatility is a bit less than what it was before. It's now coming back up, so bullion trade is back up. Another reason, we have a sneaking suspicion that there has been a shift towards off-exchange illegal trading, DABA trading. You know, DABA traders are trying to attract clients with all kinds of attractive-looking propositions, but of course clients take a lot of risks. We are looking at ways to bring that trade back into our much safer platform.
Right, and also talk about any more tie-ups. Are you looking at any more tie-ups with exchanges in India or overseas?
We have long-established tie-ups with many pretty important exchanges. What we are looking forward is towards better operationalizing those tie-ups. For example, we've got one with the Baltic Freight Exchange on freight futures. But as you know, despite very, very large demand from the Indian market for freight risk management, we can't launch those contracts yet. We have to wait for amendments of the Forward Contracts Regulation Act to come.